Dangote Petroleum Refinery and Petrochemicals has reduced its ex-depot price for petrol by some 5 naira to 1,200 naira per litre and its coastal price to 1,153 naira per litre. A move expected to influence fuel supply costs across domestic distribution channels, despite higher oil prices triggered by the ongoing Gulf tensions. Meanwhile, the Nigerian Upstream Petroleum Regulatory Commission says it is fast-tracking permits for well re-entry, barging, and crude evacuation to convert proven reserves into export revenues. Chukwuemeka Ozuzu, Senior Associate at AO2 Law, joins me now for more on development shaping the domestic energy market. Thank you so much for your time, Chukwuemeka. Let's look at what's at play right now. We've seen well over 5 price changes within the last 1 month, and this also is attributed to the movement of crude prices with the Gulf tension so far. So let's look at how this has a way of trickling down in terms of the stability in the oil market.
Thank you. Good afternoon. It's a pleasure to speak to you as always. So, like you rightly pointed out, we've seen a lot of fluctuation in terms of the pricing, both for crude and for refined products as well. Speaking about the recent reduction in the price of refined petroleum products by the Dangote Refinery, specifically the price has been reduced to about 1,200 ex-country price, then 1,153 naira for coastal pricing. What we have seen over time, or since this geopolitical tension in the Middle East has persisted, is that prices have continued to fluctuate. But interestingly, rather than increasing prices, we are seeing a reduction, and that is indicative of the fact that local refining capacity is beginning to dictate market dynamics in Nigeria, as opposed to what we had before, where the slightest fluctuation in the price of crude would directly impact the price of refined petroleum products. So the Dangote Refinery announcing the reduction in ex-country price of PMS is really indicative of the fact that there's a strong case for local refining and ramping up local refining to cushion Nigeria from the adverse effects of price fluctuations in the global markets.
While I would want to stay away from the politics of the whole supply of crude, but let's look at one thing in terms of supply. Dangote Refinery, like it says it needs consistent and steady supply of crude. But let's look at how Nigeria has been able to serve that mix, because one thing you need to point out is that this Gulf tension is has both good and bad side for the country. A lot of analysts have come to say that if Dangote Refinery is getting the needed crude it deserves, we won't need, and then the naira for crude deal is efficiently utilized, that prices won't be at this rate. What do you think?
Well, I tend to agree with that assessment because to start, producers of petroleum products in Nigeria have what is called a domestic crude supply obligation as enshrined in the Petroleum Industry Act. So there's certainly a case to be made on the Dangote Refinery side to say that supply of feedstock needs to be ramped up. They had entered into a naira for crude arrangement under which they were supposed to be receiving about 12 to 15 cargoes of crude per month. But from all indications, they receive between 3 to 5 cargoes, which is hardly enough to satisfy local demand, let alone enough to satisfy their export obligations. So certainly, if the domestic crude supply obligation is aggressively implemented, such that local refiners, not just the Dangote Refinery, but local refiners generally receive sufficient feedstock of crude, it will be able to cushion Nigeria from the adverse effects of fluctuation of prices in the global market, and then ensure that there isn't any scarcity, as we saw as we have seen in the last few weeks.
And then there is also the lifting of ban on petroleum imports in terms of bridging the gap that is in the market right now.
Correct. So you may categorize that as an about face by the regulator, but it was necessary in the circumstance, given that local supply of refined products was not enough to satisfy the domestic demand. So the regulator had to temporarily issue permits to about 5 companies or thereabouts to import refined petroleum products to ameliorate whatever shortfall arose from local refining versus the demand for refined petroleum products in the local market. But it is expected that by the time we ramp up our refining capacity, we will not have a need for those interventions by the regulator by way of granting temporary permits for importation of refined petroleum products.
Well, we can call that a stopgap measure. But let's look at one other thing again. The NMDPR is also looking at the fact that oil licensing, our rigs are actually being regimed in terms of processing it, and then also let's look at in terms of our ability, in terms of our refining ability. That's on one hand. But one thing I want to look at right now is how are we able to meet our export market in terms of crude, in terms of LNG and all that, because now is the time we're beginning to see that demand. Is Nigeria meeting that demand?
Correct, and that assessment is absolutely spot on, because the conflict, the geopolitical tension in the Middle East is both a blessing and a curse. It is a blessing in part for Nigeria because it represents a veritable opportunity for Nigeria to be able to ramp up production of not just crude, but LNG, for example, like you mentioned. Because what we've seen in the last few weeks is that the major markets that have a very high demand for LNG have started to explore other supply options because of the disruptions that the tensions in the Middle East have caused. And Nigeria enjoys a very geographical advantage because we are about 10 sailing days away from most of Europe. The rest of the Atlantic basin is also easily accessible from Nigeria. You also have the Asian market as well, where there's a very high demand for LNG. So the time is now essentially for Nigeria to ramp up production of both crude and refined products, particularly products like LNG, etc. Because there's a high demand for it now in the market, given the disruptions that the tensions in the Middle East have caused.
Let me ask you again one other question regarding our oil licensing round. The 2025 oil licensing round came, and quite a lot was said regarding that. Oh, what happened to the previous ones, the ones that were not properly utilized, what needs to be done? And then the NEPRC came out to do some clarification. But let's look at how the licensing round has so far been in terms of the progress. We see that it has moved to the bidding stage.
Correct. So in the last week or thereabouts, the NEPRC informed the bidders who were pre-qualified for the commercial and the technical phases. Those bidders have been notified as we speak, so they have moved on to the next phase of the process. But what we have seen, both in this licensing round and the one that immediately preceded it, is a very high level of transparency from the regulator, being the NEPRC. They have tried as much as possible to carry all of the stakeholders along. They have been very forthcoming with information. As a firm, we've had the opportunity to advise, and still are advising a number of clients with respect to the bid rounds, and our experience has been that the NEPRC has tried to make the process as competitive and transparent as possible, so that at the end of the day, you have operators who emerge with these licenses who have the technical and the commercial and financial capacity to bring these assets to first oil and to production as quickly as possible, which also ties back into what I had said earlier, that this is the time for Nigeria to ramp up production of crude, to be able to tap into the shortfalls that the global tensions or the tension specifically in the Middle East is causing in the supply chain.
Well, we'll try it and see how things play out in the coming days, and then also, more importantly, how we're able to utilize or take advantage of the export market for our crude and gas markets. And Chukwuemeka Ozuzu, thank you so much for your time. That was Chukwuemeka Ozuzu, Senior Associate at AO2 Law.